Hello guys, my name is Mr. Goated and welcome to another episode of the Zeroline Macro Report, where we connect the dots across global markets from the US dollar, S&P 500, gold, oil, soybeans, Bitcoin, the volatility index and other major currencies. In these episodes, we break down the key economic releases and how they shape the market this week. And if you stay tuned until the end of the video, I'm actually going to share my trading journal for this week. And I'm going to pick out one of the trades which I took on GBP on Tuesday, and I'm gonna share with you guys my process, my thinking on how and why I took this trade. Okay, so stay tuned, guys, and we will go through that towards the end. So on Friday the 14th of March at 10 a.m. New York, a data release came out for the consumer sentiment, which gauges the consumer sentiment in the United States, what people are thinking, are they spending or are they not spending? It's very important because the two main drivers of economic growth are consumer spending and productivity. These are very important. So this gives us an indication of how healthy the US economy is. So I found this article after the release was made, which says American consumer sentiment plunges on trade warfare. So that sounds very, very negative, right? So let's go through it. So over here, it says that consumer sentiment fell 11% this month to a reading of 57.9. A preliminary reading showed down from last month's reading of 64.7 and reaching its lowest level since November 2022. So it's telling us that the consumer sentiment plunged basically, and which means that consumers are spending less. And as I mentioned earlier, this means that when consumers spend less, there's going to be slower economic growth, and the impact on the US dollar will be negative. Okay, something like this will be negative for the US dollar. So the next thing is, earlier this month, Trump imposed 25% tariffs on Mexico and Canada, only to delay those duties again after pleas from business leaders. Then, after US tariffs on steel and aluminum imports went into effect Wednesday, the European Union and Canada responded swiftly with their own tariffs. So there's clearly here that a tariff war and trade war happening right now between the United States, Mexico, and Canada. And this will create more uncertainty in the market for consumers. And because of the tariffs, the prices has to rise. The businesses are going to be rising prices to be able to compete. This again leads on to people spending less, so weaker spending, and it leads to slower economic growth, which is again negative on the US dollar. Okay, the next statement that I read on this article, it says that Americans' expectations for inflation in the year ahead climbed to 4.9% this month from 4.3%, the highest level since November 2022. So it's telling us that inflation is rising, and because of this, the Fed is going to be looking at this and they might delay rate cuts. Okay, they don't want to cut rates too fast, because by cutting rates too fast, it might cause prices to go higher because more money will be entering circulation and people are going to be spending a lot more. This will create more demand on products, and businesses will raise prices to compete with each other because of the rising demand. So you don't want to really cut rates too fast, because we could go into a deeper recession if that happens, if they cut rates really fast. So I don't know personally what the Fed's going to do. Maybe they will cut rates. They know better than me, but that's just what I think, it would be kind of crazy to cut rates in these conditions. All right, the next point that's mentioned here, it says that a closely watched real-time forecast of economic growth from the Federal Reserve Bank of Atlanta shows the economy contracting a sharp 2.4% in the current quarter. So it's telling us that there's economic growth concerns, there's a recession risk because lower consumer spending and falling business investments and job losses, could lead on to slower growth, because as I mentioned, productivity is a factor. So when you have job losses, the productivity slows down. All right, and when you have lower spending, consumer spending, then businesses are going to struggle, and it could lead on to slower growth in the economy, and then lead to a recession, which is negative for the US dollar. And then it says over here that Trump did not rule out the possibility of a recession this year when asked in an interview that aired on Sunday that triggered a massive sell-off on Wall Street. Okay. So he's talking about the Federal Reserve decision, and they're thinking of keeping the rates steady for now. Just to let you know, the FOMC, the rate decision is going to be next week, I believe on Wednesday. I'm going to be showing you guys at the end so we can see when it is. And this actually has a mixed impact on USD. And the last thing I'm going to mention, yeah, as I mentioned, Fed policymakers have signaled that they're inclined to hold interest rates steady for next week and in the months ahead as they wait for more clarity on how the economy responds to Trump's barrage of policy changes. So they're going to be looking at the growth in the economy and inflation to make their decision. You know, those are the two main points they're going to be looking at to make their decision, to cut rates or to keep it steady. All right, so they need more data basically. Okay, so now that we read this article and we know what happened on Friday, according to the consumer spending, let's look at how investors reacted to the news. And by doing that, we can look at the chart. We can look at the US dollar. So on Friday, we actually had a bearish candle on the US dollar. Just to let you know, we are still below the 10 and 20 moving averages, and we've had a massive sell-off ever since the start of this month in March. And we've been overextended to the downside, all right? So in my opinion, it's a little bit too early to buy into the US dollar because the selling pressure is still present in the market. So we want to be looking for shorts in this area. We are, however, in an area, we have retested an area here. You see this blue rectangle. This is an area of demand where price previously broke out to the upside and created new highs. So investors came in very aggressively with high volume. They broke out and moved price to the upside, created new highs, created higher lows, and then created new highs again. So this is an area of interest where buyers could possibly come back aggressively into the market. So we want to be very, very careful in this area. This is an area of accumulation, in my opinion, reaccumulation. But if you are looking for shorts, we could go on to the lower time frames and find areas of interest to short. So if I go to the 5-minute time frame, an area to short might be around the 103,700 area, 103,750 area, and 103,800 area could be these could be good targets to wait for price to reach and to see how it reacts. Okay, and that's what we teach in the Zeroline. We wait for these supply and demand zones according to the time frame on the higher time frames. Sorry, the trend on the high. So we need to first know what the trend is on the high time frame, guys, before we make any decisions in the market. We need to be following the trend. The trend is your friend, as the saying goes. So we wait because we're in a downtrend right now on the 8-hour and the daily. We want to wait for the price to hit these supply areas to see how they react, and then we can trade accordingly. Okay, from what we see in the market. So if we go back on the daily, we are basically in an accumulation zone. We are in a consolidation zone. RSI is very low. It's indicating to us that it's very, very oversold, and US dollar is in low demand. But the volume, however, was not above average, so there wasn't a lot of interest in the US dollar on Friday. When we look at treasury bonds, ever since the start of the month, actually the start of January, which was around here somewhere. Sorry, this is the volatility index, my bad. Let's look at treasury bonds. So ever since the January, we've been on an uptrend. We've been creating new highs, higher lows, and we've just been consolidating in this area. And it seems like there's been a slowdown in the treasury bonds right now. The EMAs are flat right now. It's indicating to us that buyers and sellers are trading at fair value. There's not a lot of aggressive orders from either side. The RSI is hovering around the 50% line, which confirms our idea that this is a consolidation area. On and off volume, buyers coming in one day, sellers coming in one day. It's very uncertain. So in these kind of conditions, we don't really want to touch the market or trade it. We want to just leave it alone. Treasury bonds, I don't think it's the hottest kind of assets class right now to trade. Volatility. Let's go back to volatility index before I forget. So volatility index was in an uptrend clearly ever since the start of the year, and maybe a month after the start of the year started going on an uptrend, and it has been pulling back right now. So there was a lot of fear when we were going up. This is indicating that to us that there was a lot of fear in the market, and the stability was gone from the market. But now it seems like the stability is starting to come back into the market, and traders are a little bit more calm now than they were before. But it's actually bad for us scalpers, kind of, because the risk to reward that we go for in the market, it could indicate to us that we need to be taking profits off the table a little bit more faster than we did before, because of the low volatility in the market. Volatility and volume is what creates that big momentum, that big push for us to go for those higher targets and get those higher profits in the market. But because the volatility is dropping, that means the momentum is weakening in the market. So we need to be taking profits a little bit faster than what we used to. Okay. The stock market has been on a downtrend ever since the start of March. So it's been overextended all the way to the downside. EMAs are facing down, but they are starting to show some slow. They are showing us that momentum could be slowing by getting flat. And if that does happen, it could give us good buying opportunities to go long back into the monthly close to where price previously broke out. Volume has been rising, so there's been a lot of interest in the stock market recently. There's been a lot of profit taking as well, and that could contribute to the higher volume as well. But in the last few days, last 3 days, it has been kind of dead, no volume. RSI is also in a low demand but oversold area around the 30%, so it could potentially present us some opportunities soon. And the global money supply is also rising, from my understanding, from what I saw a couple of days ago. I saw the global money supply chart, and usually the US stocks and other risk assets, they tend to copy and correlate with the global money supply, but they do lag behind by a month or two. So we could see a rise in demand on US stocks and Bitcoin very, very soon, according to the global money supply. So keep an eye on that. BTC, very similar to the US stocks, it has been pulling back, and there was a lot of profit taking around this area. You can see from the volume. Oh, oops. You can see from the volume there was a lot of profit taking at the beginning of the month. Price pulled back. The EMAs are still facing down, but they are starting to show some signs that they're going to go flat soon, which could give us again buying opportunities. Oversold RSI, so it could be giving us bargain prices right now, BTC, but we need to wait and see what happens next week, because we got FOMC next week. Very, very important release for the US dollar. Gold, gold just recently broke out. There's been a high demand in gold again. I remember in the last video, guys, I mentioned that gold was pulling back, but the demand came back into gold again. Literally, we had this high here, we had this higher low, and we broke out again. We're creating new highs again on gold. So I actually traded gold on Friday, but it was kind of dead. So I didn't really get an entry on it. But because we're on an uptrend, it's going to be very easy to trade gold now, and just go with the momentum, follow the trend, and just buy, Soybeans are kind of, it actually looks very similar to Bitcoin and the stock market right now. We have been on a down. We've been seeing some profit taking around this supply area on the daily, with high volume, and the RSI has been pushed down to the 30% zone, and it looks like the demand is slowly creeping back into the soybeans, even though there is low volume. But we are in this consolidation area, I feel like, and the EMAs are starting to get flat again. Yeah, it's indicating to us that consolidation is here, but selling pressure is still present, so we need to be very careful and not buy too early into this asset class. Whenever we see EMAs facing down like this, it's indicating to us that it's too early to jump in a trade and to buy. We need to be shorting. All right, we need to be following the trend. Crude oil is the same. We've been in a downtrend for a pretty long while, to be fair, since January. We're just going down. The EMAs, look at that, they're still going down. Like, there's no indication that there's a trend shift yet in the market. The EMA is not flat yet, but it could become flat soon. Volume is kind of dead. There's no volume in the last couple of days. And RSI, however, has hit the 30% and rising, so demand is slowly creeping back into crude oil. All right, guys, before I go into my GBP trade, I'm going to show you guys what releases are coming out next week, okay? So some of the main releases that are coming out for the US dollar are core retail sales. That's coming out on Monday, March the 17th at 8:30 a.m. And we got other retail sales. We got, as I mentioned, FOMC on Wednesday, 2 p.m. New York time. So we're going to see if they're actually going to keep the rates the same at 4.5%, or they're going to cut it. If they do cut it, we're going to see massive, massive demand coming back into risk assets such as Bitcoin and the US stock market. On 8:30 a.m. on Thursday, we got unemployment claims, so we're going to get some employment data for the US dollar. So these are some of the releases that we could focus on next week. So As I mentioned in the earlier in the video, this is actually one of the first times that I'm going to be showing you guys my trading journal. I'm just going to focus on what I did this week on my trading journal. So let's get into it. So guys, when I talk to someone that's a beginner and it's their first time coming to trade in the market, they expect to make a lot of money. They see traders, gurus, trading gurus on Instagram, and they got these Lambos and all that stuff. But it's not that simple, guys. Think of it like, imagine, guys, you want to become a doctor, all right? You have to go to the university and study for 4, 5, 6 years, right, to become an expert doctor, to become qualified doctor. Trading is the same concept. You have to go through the university of life in trading. Trading itself will teach you life lessons. It will teach you lessons that are going to be valuable, and you need to be dedicated on your journey. And as long as you're dedicated and passionate about trading, you will get there. It's all about mentality, guys. It's all about the psychology. You don't have to be the smartest person to become a good trader. All you need is a strong mindset and good psychology, good emotional control, and a willingness to make mistakes and improve over time. That's all it is. All right. So this is my journal, guys. Journaling is actually very, very important in trading because you'll be able to figure out your flows in your strategy and be able to collect data to make changes if you do make mistakes. So it's very, very important to journal, guys. Some people are lazy, they don't like to journal, but I find it very, very, very important in trading to journal your setup and your trades. So on Tuesday, I skipped Monday. I didn't trade on Monday. I had to do something. I was busy. But on Tuesday, I took 3 trades and I came out profitable on one of my trades. I cut my trade at minus 5 points. On this one, it was on JPY. I made 95 points, and on GBP, I made 240 points. This is one of the trades that I'm going to go through. This one right here on Tuesday. And on Wednesday, I made 1 trade on GBP, but I closed it at break even because I saw some weakness in the trade. So I closed it. I cut the losses. Cutting losses is very important in trading, guys. When you cut losses, you give yourself more room to become more profitable. If you don't cut your losses and let it go, it's going to be a little bit more harder to become profitable. So, and learning how to cut losses is a skill in itself. You have to, really, really get the experience in the market, get the eyes and get the knowledge to be able to do something like that. The next trade that I took on Wednesday was another winner on GBP. I made 360 points. On Thursday, I made a trade on GBP. I made 70 points. I cut one of my losses on JPY. I made minus 40, but I came out profitable. I made 30 on that day. On Friday, it was a very, very low volatility day. It was just rubbish. I had 1 trade on GBP, but I cut my losses again. I could have lost 140, but I cut my losses. I only lost minus 40. Same as this, I could have lost 240, but I only lost minus 40. So the total amount of points that I made for this week was 680 points with a win rate of 57.1%. So I'm winning more than I'm losing. And as long as because I'm trading with a 2-1 ratio, so I'm risking 1 to make 2. All right, I only need 34% to break even, on my week, and to make 57.1% is massive in my opinion for a 2-1 ratio strategy. And then at the end, I usually put my notes here of what my strengths were, what my weaknesses were, and how to improve this week and what to improve on. So let's go on the trade that I made on Tuesday. Was it this one? This one right here. Okay, I've already put, this is my entry, this is my stop loss, this is my TP. I've already put those details in on GBP on that day, and this is the trade. If you don't believe me, guys, I actually took a look at this, guys. So I had the entry over here. There's evidence is right there. I had an entry at 1.2930, and I had the exit at 1.2954. I like to trade during the New York sessions right here. So after New York opens, I like to watch it and see what happens. So why did I take this trade? Let's go back. Let's replay this back and go back to that day. All right. So why did I take this trade? So I was watching the market on that day. The first thing that I do in the market, I like to see the overall trend of the market. Okay, so on the 8-hour, we are clearly on a bullish uptrend. Look at the EMAs, guys. They're facing up, they're wide apart right here, facing up, and the momentum is literally telling you that you need to be buying in the market. The trend is your friend, guys. The trend is your friend. You need to be following the trend. If you don't follow the trend, there's a high probability that you're going against the market, and the institution will humble you. Okay, the market will humble you because of that. So I found out what the trend was. I confirmed it on the 4 hour. I confirmed it on the 1 hour. And all the time frames were telling me that this is a bullish market today. I need to be buying. All right. I looked at the history of what happened in other sessions. So in Tokyo, we had some kind of consolidation, and then they pushed the price up, higher highs, higher lows. We had equal highs, we had consolidation, we had higher highs, and then we had a massive dump back to the demand zone where price previously went up, and then we had an initial run up all the way to London session, and then London opened. They gave a little pullback into the reaction zone. These lines are my reaction zone over here, so which I draw manually, okay. And then we had a pullback into this reaction zone, and then we had a massive run up, higher high, higher low, higher high, and then we had a slowdown in price. We went back down, created equal lows in the market. So this area was an equal low. It hit the reaction zone again, and then New York opened. New York started manipulating traders. They pushed price up aggressively, and then they pushed price back down and took this liquidity over here. And this was a clear demand zone because before New York opened, because price, oh, what happened here? Price basically went up from here. It broke out, and this became a demand zone, an area of interest. So what I did was I waited for price to come back down into that area of interest with patience, okay? And then when price hit this area, I went into a lower time frame, and I watched it very closely, and I waited and waited and waited for EMAs to curl and to face up. And then when I saw and confirmed that this has happened, I entered over here, and I put my stop loss right below the 5-minute demand zone right there. And I went for a 2-1 trade, okay? So I risked, let's imagine I risked 1% here, okay? I risked 1%, and I went for a 2% take profit, and we got hit literally over here, okay? So I came out profitable on that day with just one trade. Okay, I did have one trade before on JPY on another pair, and I actually made a little bit of profit here by trailing my stop loss, and I made a little bit of profit here, and then this just completed my day this trade. Okay, trading, guys, takes a lot of experience. All right, it takes a lot of market watching, it takes a lot of dedication. And what I'm going to be doing over the next couple of weeks and months, I'm going to be creating a trading course, and I'm going to be teaching you guys how I make trades like this. Okay, I'm going to make it very, very simple. So if you give us a subscribe and a like and give us some support, I'm actually going to be giving some good discounts on the first few people on our channel, to come to the course and learn. I'm going to be giving you guys videos and PDFs to learn from. We're going to also have a closed community where we trade live together. I'm going to be sending my setups every day during New York, and you guys can get some ideas and make similar trades to what I do. I want to create a group full of winners. I want to create a nice community where we can trade and where we can make a lot of money together. We're entering an age of AI right now, and a lot of jobs are going to be lost because of this new technology. So it's always good to learn a new skill, which can make you a lot of money. So that's something to consider. All right, guys, that's all I think I'm going to be mentioning in this video. I really had fun. It was really good. So I hope you guys have a great weekend and have a strong start to your week. All right, I'll talk to you guys next week. Take care. Bye bye.